Hi, everyone. Welcome to Discover the Duncan Difference podcast. Today, I am with the one and only David Leng. We're going to be talking about commercial insurance, risk advising, all of the good things. David Leng is our resident expert on all of the above and so much more. So, welcome, David.
Yeah, thank you.
Let's get started. Just tell me a little bit about yourself, business-wise and personal-wise.
I've been doing this a lot of years. I actually have a degree, and I started with my degree in risk management insurance from Penn State more than a couple of years ago.
More than a couple. So how did you know that you wanted to get into that? So you've always, I didn't realize that that's always been your passion.
Interestingly enough, I actually went to Penn State to be an architect.
Oh, wow. Okay.
And during my internship between freshman and sophomore year, I decided I didn't like it.
Oh.
I didn't like sitting in the office. I can't sit still.
Yeah.
So the family, my grandfather started Leng Insurance Agency in 47, and my dad told me don't go into it. But I did do the risk management insurance. I went through Travelers, claim school, underwriting school, things like that. Also did an internship at Statesman Insurance Company, and he was trying to push me to the insurance company side, but it wasn't quite right. So I actually started consulting out of college.
Okay.
And was working directly with businesses and eventually, for various reasons, even though we were helping businesses to become safer, be better risks, deal with challenges and issues that they face, it wasn't necessarily translating into the insurance costs for them, because ultimately, how should I say that? If an agent doesn't help somebody manage the risk and their premiums go up, the insurance industry misincentivizes, as I like to say. The agent's income goes up. So, and eventually, after dealing with this for a period of time, my dad says, well, if you're having an issue with agents, why don't you just cut out the middleman?
Yeah.
So that's kind of what we did. I actually already had my license, but I actually started using it. So we would, in a sense, that because before, not besides the advising advice, I was actually helping businesses design their insurance programs. Because let's just say, policies are generic. They are structured a certain way to appeal to a lot of businesses, but not customized unless you use, I can't even tell you how many thousands of endorsements are available on a property policy.
Yeah.
And general liability policy. So, you have to dig in and understand what the issue is and what they do so they could design their program. And that's kind of what I was doing for a while, and then decided to cut the agent out.
Yeah, I love that. When did you start with Duncan?
I merged in July 1st of 1999.
Wow.
It was interesting. Our family agency at one point, we sold to Mellon Bank. After kind of butting my head up against a wall there for a while with all the changes and Mellon eventually selling, I knew that the insurance agency that we were dealing with would go by the wayside and be sold, either to Citizens, I think our Royal Bank of Scotland. There's a couple of suitors back then, if I remember what Marty McGuinn told me. But anyhow, so I started having a conversation about buying the family agency back out. And when I was going to leave, I was debating, do I go on my own or do I merge with somebody? And I started talking to a couple close friends of mine, one of which is a gentleman that said, hey, don't forget about Jack's kids. Jack Duncan, which is John and Dave Duncan's father, is I actually was on the Agents Advisory Council of Harleysville with, and I used to ride over to his house, and him and I would drive across the state. And
That's
I got
cool.
I got to know Jack quite well, and everybody obviously. But
so at this point, he had already passed away.
Yeah, unfortunately passed away on my wife's birthday in '97. That's how I remember the date so vividly.
Yeah, that's crazy.
Yeah, I got the phone call, but so and come 99, I was looking at it, so I came over, went to lunch with Dave, your dad, and your Uncle John, and it was just like we clicked.
Yeah.
They have the ambition to make sure they're doing the best for their client. Jack lived by that rule. You take care of the client, nothing else matters.
Mm-hmm.
And if you basically take care of the client, they take care of you.
Yeah, exactly.
So, and that's the same philosophy, but being very innovative here with doing the financial services, the accounting and everything, I was able to help us go to the next level in terms of bringing the risk management expertise to the organization. And, we built, an entire division, East Coast Risk Management, which is now Keystone Risk Management. Started with one individual back in 2001 to, they got to be pushing 70 employees just in that.
That's amazing.
Yeah.
In that division. Yeah.
And they do, safety, claims, human resources. They even got 2 attorneys, DOT special, specialists, things like that to better help our clients. So the idea behind it is we sit there and try to dig in and do the hone in on the first step of risk management, which is the risk identification. When you deal with the risk identification, that helps you determine what do you need to address and how do you address it,
right?
Including the insurance. So
yeah,
but that's kind of where where it started, and we evolved into that. But that's a long answer for your one question.
I love it. I love that. I love that about my grandpa. I think that's awesome. And I love that you had that, that lunch with my dad and my uncle, and that you guys clicked, because I think the philosophies are so similar, and just the way that we go about business. And that's, obviously we think that's the right way to do it, but I think it's you're doing what's best for your client, and in return, you get good things back, but it's really not about that. It's about just doing the right thing for the client and being there for them.
Yep.
So take me through, you meet a new client, or you have somebody who is considering switching to Duncan. What is one of the first things that you'll do with them?
Well, I'm going to use an example. So I get referred into a business up in Apollo. This was a little, 10 years and I guess a little over 10 years ago. Go in, I meet with Ken, the owner, and basically explain to him what we do and how we do it in terms of trying to dig in and understand their operations. Now, in this case, they were kind of running a fever on their workers' compensation. They had a higher experience modifier, meaning that the state was surcharging them from a workers' compensation premium standpoint. And they had a couple incidences. They're a wood product manufacturer. And we went in and said, we can help you address this. And at the same time, while we're addressing the workers' compensation issues, we can also look at, particularly in the wood side, you have fire issues and so forth. We could try to dig in and try to, help you become more attractive to insurance companies and try to get better control over your costs, as well as making sure your insurance program is ready to be, can respond to you.
Yeah.
And he seemed a little skeptical. However, when I started going through a bunch of what ifs and things like that, it kind of started getting into his head, like, what happens if something happens? What do you want to do with your employees? What if, you're shut down for an extended period of time and have to rebuild? How are you going to get taken care of, you and your family?
Right.
What do you need to rebuild? And in reality, it was a very interesting conversation in that regards. But that's when we went through that, we determined his program wouldn't respond appropriately. Well, let's put it this way: he was down 13 months. And because of how we changed things, nobody missed a paycheck.
Yeah, that's incredible.
They were able to rebuild we replaced all the equipment and things like that. Had we not done that job, he would have been short more than $4 million in terms of coverage.
Oh my gosh.
And this might sound strange. That is not what I'm proudest about.
Yeah.
I mean, he's been in business for 10 years, since then. He's been growing. He's more than double what he used to be. We had a plan of action afterwards, and he actually helped him become better afterwards than he was before in terms of efficiency and operations.
Yeah.
But what I was proudest of is this occurred literally less than 3 months after we started working with Ken.
Wow, I didn't even realize how soon after.
Yes.
Wow.
Yeah, that quick.
I mean, wow.
And the first thing that I always do, and it goes back to when I was consulting, getting employees to go home the same way they showed up. So we were addressing, and we saw workers' compensation things that we could address. But the biggest thing that caught our attention was there was no auditable alarm inside the shop.
Oh, wow.
So if there was a fire, they didn't have any means for the employees to hear it other than employees screaming.
Oh.
And there was no evacuation plan in place. And the building, since it had been added on to and so forth, kind of was hodgepodge and didn't have direct lines of sights to doors. So the first thing that we did was actually put in a plan. Ken had built with woodworking.
Yeah.
Places around the shop to have one of those compressed air horns.
Yeah.
And they did several trainings. And one day on 4/4/14, the horn goes off. The office manager's like, "We just had a practice session a week ago. What is somebody doing?"
Yeah.
And she grabbed the employee roster off of her desk, went outside to go to the meeting place, and didn't see the employees walking. She saw them running.
Oh my gosh.
From the time that the air horn sounded to the time that the roof came down was less than 10 minutes.
Oh my gosh, that gives me goosebumps.
Wow. And it's because with the woodwork, the dust collection system went through the attic above the roof line, not above the ceiling, above the drywall.
Yeah.
And when the dust and the ductwork kind of exploded and caught fire, it started taking the roof down that quick.
Oh my gosh, that's crazy.
So, but that's what we do. And he's in business because we took the time to, not only protect his employees, and we made sure that he had the right coverage to respond. And statistically speaking, the Insurance Institute of Home and Business Safety says, slightly over 50% of businesses that suffer an insured catastrophe either can't afford to rebuild or close within 3 years. Wow. So, and I've gone through a number of these in my career. Yeah. Span a couple decades.
Yeah, just a few.
Just a few.
That's pretty incredible to hear because I didn't even know that full story. Especially the air horn, I had no idea. So it's like, and I get it. That would be what I would be most proud of too. Is that nobody died. Nobody got seriously injured or passed away, and that's like a really and within 10 minutes. That's really amazing.
Well, yeah, and it all started with an employee that was cleaning off the air filter. It's in the spray booth. It's a metal screen, and they're blowing it off, and he forgot to ground himself. So it created electric static discharge, which caused the spark, which ignited the panel.
Oh, wow.
And he had to go outside the spray booth, opening the door to get to the fire extinguisher because somebody had moved it out for some reason. And when the door was open, the fire extinguishing system discharged in the back, but not the whole booth. And it created an airflow, and you could actually see in the video before it went out, the sparks flying out into the shop, getting sucked into the dust collection system, and then it starts.
Wow.
So it happens that quickly.
Yeah.
Nobody thinks it's going to happen.
Right.
It just does.
And that's truly like the most important part of your job. And I know this as a business owner and being, my uncle does my commercial insurance, and he has asked me questions that I would never think as a business owner. Like my brain just does not work that way. I'm worried about making money for my business. I'm not worried about, what if this happens? What if that happens? That is your job, and you guys do it so well. I think that's the most important thing that you guys do.
Yeah. And like I said, it all started because the focus is we start with the employees and kind of the injury side of it for some reason, because employees touch every part of your business, whether you realize it or not. Employees do a lot of good things, and sometimes
they can do some really dumb things.
It happens, but accidents happen, and nobody's perfect.
Right, exactly.
And a little over 4 months into my career, I was referred into a manufacturer to consult for, and it was going for my first meeting. And during that, when I pulled into the parking lot, all I saw were ambulances, fire trucks, police, and if you've ever heard of a stamping plant, they're loud.
Yeah.
This thing was bone quiet, other than the squawking of the radios.
Yeah.
And because an employee had gotten killed. and a drive chain had come off the conveyor system. They were waiting for a part, so I kept going off. It only took, a couple minutes for him to turn off the power, reattach the chain, put it back, to put the power back on, and the conveyor runs. So I guess this has happened so many times that he did not lock out the breaker. In the meantime, another machine had gone down without power. The employee couldn't get started. It wasn't on the main panel, like the panel next to the machine.
Yeah.
So he went to the main box, didn't know which one was his, and just started turning them on. From what I was told, he was, reaching in, and the drive chain caught his sleeve. He was going to jerk it back, and he was holding onto a metal post on one side or something, and he went to jerk back. And when he pulled back to pull his sleeve free, I guess, you use so much force, your hand continues.
Yeah.
It hit into the power panel.
Oh, no. Yes. Which was on.
Yes.
Oh, gosh.
So unfortunately, he didn't make it. And I saw how little workers' compensation did for the family, because they had 2 kids under the age of 3.
Oh, that's devastating.
The maintenance guy was actually in the wedding party of the owner, one of his best friends. So I saw how it affected everybody, the employees and so forth. So the quest has always been to get employees to go home the same way that they showed up.
Yeah.
And that whole process of trying to figure that out and deal with it and try to address, the behavioral type side of the safety, to get, have fewer injuries and so forth, is what, has helped so many of our clients, slash their insurance costs by, over $60 million since 2004, 20 years.
Yeah.
I think it's probably closer to 65 by now. But so we can help reduce costs like we did with Ken in his wood product. We were able to address the safety issues, which made it more attractive, which helped us reduce his workers' compensation costs when he renewed just before this occurred. But that also enabled us to take the funds from that and improve his insurance program to get the coverages he needed. And when it was all said and done, it was probably a washer. Maybe he even saved a little, but he had everything he needed.
Yeah, he had even better coverage. Yeah.
I mean, because not only did he suffer being down, he had to outsource product.
Yes.
Which cost $1.37 for every dollar he sold. Insurance company pays the difference. And then once he reopened, he only had about 60% of his clients.
Yeah.
So we still had to cover that the difference in his income between what his expenses were, and we did that for 6 months before he got closer to being even.
Wow.
But it all started with, how do we address the employees, and understanding and everything he did, we overhauled the whole process.
Yeah.
But I mean, that was the idea, is just, as we gotten into it, we have clients time and time again that have come back and said, hey, not only you helped reduce our insurance costs, you've helped improve our coverage program. You've helped us become more efficient from an operations standpoint, which means we're more profitable. Heck, I have some clients that have told me that they were able to afford a place in Florida because of how much we've helped them grow their company. Yeah. So one of our clients, that he recently told us, hey, my premium is back to where it was when I met you 10 years ago.
Yeah.
And he looked, and he's smiling, and I said, and he goes, yeah, I have 4 times the number of employees that I have today. And that's part of it. It's actually being part of their team to help them focus on growing and running their company versus dealing with the minutia of the insurance and the day-to-day stuff. And ultimately, we're part of their management team. So, it's common when we do our mid-year reviews for us to dig in and not just deal with the insurance stuff. We're actually dealing with what's going on in the business. What are you looking to do? What can we help you achieve in terms of doing that? And, it might be they're going, thinking about doing acquisitions, which means we're going to get involved with due diligence and making sure that when they go to acquire somebody, they're acquiring the right one.
Yeah.
I actually told a client once, I kind of don't think you want to do this.
Yeah.
I said, this is what I'm seeing. I think there's It might sound strange. When we analyze workers' compensation, I can actually identify when there's a cultural issue inside of an organization. And I saw
Wow.
it at this place. Uh,
Interesting.
um, yeah, it started with the fact that the president of the company that they were about to buy, who would stay on, never came over and shook my hand, never left their office, sent over
Mm.
some people from management, kept saying, oh, catch you later, catch you later.
Mhm.
Went off to lunch, even though I had flown into town for the day.
Wow.
Yeah. And I'm like, that is just really odd.
Yeah.
And they did offer less to buy it. And when they said there was no counter, I went, it's worse than I thought.
Yeah.
So understanding that culture drives a lot of things inside of an organization, that's kind of why we also look at the employees. Um, you know, back when I was in college, our professor handed out an article
Mhm.
relating to when Paul O'Neill became the CEO of Alcoa. At the press conference, all he wanted to talk about was safety. A lot of
Mhm.
people thought he was nuts. There were literally people going off and selling their stock.
Wow.
And he proved that by focusing on safety, a company can actually become more productive, more
Mhm.
profitable, grow. I mean, it was, and I mean, the success is ridiculous in terms of how much they've had. The
Yeah.
safest way of doing something is also the most productive. Um, I've had some people say, "Well, no, if that employee, has to lift a 100-pound piece of steel so he can cut it and he's physically able to pick it up, rather than waiting for another employee or for a piece of equipment, that he should just do it and start cutting." But yet, when that employee is off because of back, shoulder, or whatever,
Mhm.
you've lost their productivity.
Yeah.
And he said, well, we have other employees, we can cover it with overtime, and I'm like going ka-ching, ka-ching, with regards to
Yes.
how much that's going to
Yeah. Both of
cost.
those. Yeah. Everything's gonna
And
cost.
then not only that, then the workers' compensation, you're going
Right.
to pay back to the insurance company that injury.
Yeah.
And then let's say they don't come back to work. Now you
Mhm.
have the cost of hiring somebody.
Right.
And, it's so the safest way of doing something over time is also the most productive. And
Mhm.
in reality, when you drive that culture, the employees will actually help your company, uh, do better. So when we looked at um, the with regard to fires, some of the employees had insight as to what they thought might actually help Ken be more productive
Mhm.
once they reopen, in terms of reconfiguring or even changing the types of machines that they had.
Oh wow.
So those are the things that we get involved with our clients, that you wouldn't think, oh, here's some insurance agent that
Yeah. Right.
would do that.
Yeah, right. Yeah,
So
it's so cool how we're like in every single part of that,
yes.
from the employees to the insurance,
Mm-hmm.
every single part of it. And I think that's what really sets us apart, is getting in there with the employees, learning about their safety, learning about the
Mm-hmm.
productivity. It's something that I have heard of other companies doing in the way that we do it. I think that that's what makes us really different and sets us apart for sure.
Yeah, and it's basic because everybody in an organization wears a hat.
Hmm. Hmm.
Um, and in some cases people wear a lot of hats,
That's very true.
and
Yes.
some hats will fit better than others.
Yeah.
Um, and therefore the ones that don't fit as well will tend to suffer. But by
Hmm.
having the depth and breadth that we do, between the Duncan Financial Group and Keystone Risk Management, East Coast Risk Management, we're able to supplement and provide resources. Even when, like, let's say somebody has an HR professional on staff, the fact that we have true attorneys on staff, that they can pick up the phone and have a quick conversation, that already knows their operation,
Yes.
and they're not necessarily getting a bill for that
Yep.
couple minute conversation.
Hmm.
It really helps them be more proactive on dealing with things, rather than saying, well, let me deal with that, and because I don't want to pay for an attorney in case if
Right.
it goes all smooth, but maybe it doesn't.
Right.
And
Exactly. And you're prepared.
now you are going to be paying for it. Yeah.
Exactly. Yes,
So
absolutely.
I forget what the expression is. Uh, an ounce of prevention is worth a pound of cure, I think is
That's perfect.
I
Yep.
think that's probably the best one I could think of right now.
Yeah.
So in the insurance market, obviously, if unless you don't read the newspaper, turn on the television, or go on the internet,
Yeah.
um, there are certain segments of the insurance industry that are causing insurance rates to go up
Hmm.
significantly. all the weather events, the energized storms and things as they're calling it. We set a record in terms of the number in 2022. We passed it in 21. We passed it in 23. Because of that, insurance companies are looking very heavily at property insurance. Auto insurance continues to cause a problem, commercial auto, so they're still looking at that. And the insurance industry goes by what they call combined ratios. For every dollar that they bring in, how much do they spend?
Yeah.
And in most cases, insurance companies' combined ratios are going over 100, which means they're losing money every time they sell a policy. They're paying out more money in claims and expenses than they are making in premium.
Right, and they've got to make that up.
Yes, and so they're taking rate increases, and that's where, there's two different segments. There's one where everybody's just seeing the rate increase and the rate push, and face it, inflation has not been kind the last couple of years.
No.
And think of how much cars have gone up in cost, how long it takes to fix a car.
Oh, yeah.
That's all getting pushed into, unfortunately, the insurance premium, because the insurance companies just can't eat that cost.
No.
Despite what I swear the politicians think.
Yeah.
Ultimately, people pay for whatever happens.
Exactly, yeah.
And so looking at all that, that's where dealing with the risks and issues and trying to help our clients become more attractive to insurance companies helps mitigate that even, and keep those costs down.
Yeah.
And sometimes we get involved with, we've had a number of clients that have moved from the traditional insurance marketplace because it's too unstable for them, and we put them in alternatives like self-insurance, captives, risk retention groups, things like that, where they may take a little risk on themselves, but it's still within reason.
Yeah.
And ultimately, they receive the benefit of that, taking that risk.
Right.
Because actually, the most expensive way to insure yourself is a standard guarantee cost insurance policy.
Yeah.
So that's a lot of what we deal with is changing sometimes how someone finances their claims.
Yeah.
Finances the loss, because face it, people buy insurance to pay their claims.
Yeah, absolutely. That's it.
It's pretty straightforward.
Yeah, simple as that.
Yeah. So, but if we can change how that, and you think about it, if you raise your deductible on your auto insurance, your premiums going to go down. But we're doing that on a little bit bigger scale.
Yeah, much bigger scale.
And it might not be that we're going with huge deductibles, but maybe they're taking a little bit of a share.
Right.
And that's what you have to look at. And there's sometimes those alternatives work out for the better long term, because, face it, some of our clients, they may only see a significant loss once every 7 or 10 years.
Right.
So all the other years, the insurance company is making a lot of money on them.
A lot of money.
Because insurance operates on the law of large numbers.
Yeah.
A lot of people have to not have claims to pay for the few that do.
Exactly.
And the problem is we're having more claims. So
that's absolutely.
So that's where the system's kind of breaking down. The other side of it is there are industries that the insurance companies are completely struggling. High risk property. It might be certain types of manufacturing risks, and it might be habitational type risks. Apartments, condos, properties that are maybe frame structure that don't have sprinkler systems, and they're seeing significant. We've actually gotten some calls from some employers that their premiums have quintupled.
Oh, wow. Yeah.
And they're like, "Can you help us?" Yeah. And there's a way to go about it, but unfortunately, just going out and shopping their insurance, they keep getting the same thing. Competition only gets you so far when the entire market is saying, sorry, you're considered a non-standard risk now. Yeah. Which doesn't sit well, especially when somebody has never had a claim.
Right.
The problem
very frustrating.
Yes, very frustrating. So, they're like, I've never had a claim, so why do I have to pay for everybody else's
problems?
And someone said that to me one day, and I said, you know what? I get your point, but if only those that had claims paid for their losses, and those that didn't have to, I said that sounds like self-insurance for everybody.
Yes,
I said, for lack of a better term, but so and it kind of just clicked. But it's one of those things, like, you have to look at it as, you're helping not only to pay for what could happen to you, but what does happen to somebody else. So, and insurance companies price it based on what they perceive your risk to be, your risk profile. So if we can improve that risk profile, make you look better to insurance companies, then ultimately we can get better rates. So in some cases, we are still able to actually help, even though the insurance market is taking decent rate increase.
Yeah.
We've actually been able to get employers that have actually gotten reductions because we've changed things and helped them become
things in place. Yeah.
Yes, correct. And that actually has helped them reduce their costs. But ultimately, once again, we talked about people buy insurance to pay their claims. My favorite line is, or question I should say is, okay, what does Swiss cheese, donuts, and insurance policies have in common?
What?
Swiss cheese, donuts, and insurance policies have in common.
Give it to me.
Swiss cheese, donuts. It's called a hole.
Yep.
Holes.
Yep.
So insurance companies.
Little holes, big holes.
Yeah, exactly. Some of them could be small, some could be big.
Yeah.
But insurance companies are only going to pay contractually what's in the policy.
Right.
And what we're actually seeing, because I do get feedback from the insurance industry relating to claim activity. I sit on the Technical Affairs Committee for the Independent Agents and Brokers National Technical Affairs Committee. And so we see a lot of claim activity and interesting claims and things like that. But or sometimes even errors and omissions where an agent has either made a mistake or been accused of making a mistake. And one of the things we're seeing is how, since so many businesses are looking to get quotes, they may look at and say, okay, my building limit is this, my contents limit's that, I have this amount of business income. As long as I get those three things, we're fine.
Yeah.
Well, maybe not. Some insurance companies, well, let me ask you this. If you're going to build a building, do you think you have to put a foundation down first?
Yeah.
Okay.
Important. Yeah.
Yes. Okay. Well, that is not covered under a traditional insurance policy, the foundation.
Oh, wow.
Yes.
Wow.
You have to endorse that on. And there's endorsements. I told you there's over 1,000.
Yeah.
So, but some insurance companies include that in their language, a few, but most don't.
You'd have to know that.
You have to endorse it on. So if you go to rebuild, you go to rebuild your building, replacement cost means pay to repair or replace your building as is. Doesn't mean they're going to replace it with what you need to have, current code. They're saying we're going to replace what you have. So you have to buy separate coverage to bring it up to code.
Yeah.
And they might see, I got some ordinance law coverage here. Well, some policies may include 10,000. Some may include 25, 100. Heck, we've even seen some include maybe 1 million. But is that enough? What they offer, is that going to be enough? When Ken went to rebuild it, we estimated before the loss, that he was going to need about 500,000. So we put that on the policy in combination what was built in plus by endorsement. Ended up he needed about 560. But in the scheme of a $7 million overall claim, being off by 60,000 is not bad. Not bad, and that's it's close enough.
Yeah,
because nothing's going to be perfect, but
right,
you got to get it close.
Yeah.
So you have to look at it and say, what exactly does somebody have? So that's why we do our coverage analysis program, where we dig in and determine what are the core coverages, the minimum coverages that our clients need to have.
Yeah.
So that if we go from this company to that company to that company, we could then take that grid and look at the companies and say, this one meets it, this one doesn't. We have to request more endorsements, which will affect the premium.
Right.
We go over here, we need to do the same thing. And when it's all said and done, we've leveled the playing field in terms of what they need.
Yeah.
And then can figure out what's the most cost-effective way of insuring it afterwards. So that come claim time, I think most of our clients prefer to receive a check than having to write a check when something happens.
Absolutely, yes.
So.
Okay, so David, to wrap it up,
okay.
If there was somebody who is watching or listening that was thinking about switching to Duncan for their commercial insurance, if they were thinking about bringing you on as a risk advisor, what's one thing that you would tell them?
I would say I'll use when you said the Duncan differences are slow.
Yeah.
Actually, I would say experience the Duncan difference.
Yeah.
Take the time. Let's have a conversation. We don't charge to do assessments. We don't charge to talk to somebody.
Mhm.
We will have a conversation, and you can see firsthand how we do things.
Yeah.
And if it makes sense to you, then we can proceed. But
Mhm.
if it doesn't, that's okay too. We're
Yeah.
not necessarily for everybody, but you could then experience, because a lot of agents go around saying, "Hey, we'll save you money. We could do this. We could do that." And they choose because they get the quotes in, and then they look next to each other and say, "Well, how do I
This one?
compare
Yeah.
this?" And then how do they all talk about having great service, or they can help with claims, and
Yes.
and when it's all said and done, and until they sign and experience the new agent, they don't know. We're
Mhm.
basically letting to, you wouldn't buy a car without a test drive.
Right.
We're letting somebody test drive before they buy. That's
Absolutely.
really what we're trying to do and that also gives us the ability to say, yeah, we can understand your business. Or
Yeah.
maybe, and sometimes we've gone in and somebody's doing everything that they should be. And
Yeah.
that's great.
Yeah.
We could say, hey, you're doing great, move on. But on the other hand, if we're going through them, we can say, wait a minute, here's some things you're doing well. Here's some things you're doing okay, but you should probably tweak.
Mhm.
Maybe there's things that you didn't even know you can do
Yeah.
that you should be. I mean, we just ran into a business right now that is not federally compliant with regards to the liability limit on their fleet
Mm.
because they're transporting students.
Oh. Oh.
And they moved from having smaller vehicles to buses,
Mhm.
and they did not change their insurance. But that's the
Ooh.
kind of stuff that we quickly identify as part of it. And as we analyzed and went through their coverages during the analysis, I'm like, and we figured out what they're doing. They're doing everything proper, from driver screening,
Mhm.
screening for any, like the Megan's Law, child abuse stuff. They're doing all that right.
Mhm.
They just missed that piece.
Yeah.
So
Yeah.
we'll address that piece. But by understanding they're doing everything that they should be, when I had the conversation with their insurance company, now that they've come on board, they've agreed to extend the additional coverage for a nominal amount of money because they didn't realize how much they've been doing to protect,
Yeah.
the
Yeah.
the
You've shown them
students
how
and everybody else.
attractive
Correct.
they are. Yeah.
Yes.
Yeah.
So it was just sometimes shedding it in a brighter light
Yeah.
helps.
Yeah. And you guys know that.
Yes.
Yes. Awesome. Thank you so much for
Yep.
being part of this, David.
Thank you.
And thank you for everyone who is tuning in to Discover the Duncan Difference podcast. We drop at 8 a.m. every Monday morning, wherever you find your podcasts. And we thank you guys so much for joining.